Let's go ahead and dive in. So I am Lee Powers. I'm the Director of Operations here at KS Management. You know, if you've been to all the other seminars, I'm the one that does most of them. And then with me here, I have Nick.
I'm looking there at the camera.
Yeah.
Hi, guys.
Yeah, I forgot to give that disclosure for those of you that don't remember. The camera's in the center of the room, and it does focus on you if you start talking. So if you don't want everyone to hear it, precisely. So we're going to, we did a financial seminar here last year, and a lot of feedback we got. People just kind of wanted to dig into it a little more, know how to read the financial statements and just get a little more nitty gritty into the details. So that's what we're going to do here tonight. I forgot, Tara, can you pop on and introduce yourself real quick?
Hi, I'm Tara, the accounts manager.
Come in here. There's room. There's room in here. Come on.
Right.
Should probably spend them in our office over here, right?
Yeah, we have her sitting in the other room so she can answer chats and questions that pop in. Well, when she gets hers on, we have Tara here with us too that's kind of moderating the chat for us. So if you have any questions, those of you that are on, I almost said Zoom, on Google Meet, feel free to type in any questions that you have there, and Tara will read them out to us and we'll get them answered for you. So the first thing I want to dive into is the online portal. So you guys as board members, I'm sure you're familiar with the portal. You log in every day, check it every 10 minutes.
Not me.
So there's a few sections in there that are super important to you guys, with financials in particular. So the document section is something that every homeowner can see, but you guys as board members have more access. So you can see more sensitive financial information. So you can view and download all the financial packets that are generated each month that are stored in there for eternity for you to look at. You can view bank statements and invoices. And then there is a homeowner version of the financials on the portal as well. So those are there and they're loaded at the same time. Hey, here's Tara. Perfect. Okay. You can flip over to the other screen there. So the homeowner version of the financials, they're posted the same time that your guys' board version is, but it's just a reduced set of financials. So it has the balance sheet, the cover page, the income and expense sheet, the basics like that, but it doesn't have all the supporting like bank statements, all the co-owners' financial delinquency reports, prepaid reports. It doesn't have
No transaction details or anything like that.
precisely, but it's there so they can see where the association's money goes, how much money is on
Get all
hand.
that on my phone.
Yep, yeah, they can do that too. And then a couple other sections. So these are specific just to board members. So on the left-hand side, which I'll flip to it in another screen here in a second, but on the left-hand side, there's a section that says board. And I just want to. Board actions. So that's where you guys as board members can see invoices, bank accounts, you can run live reports, and get into the nitty gritty of the financials. So something to kind of mention with those is all of them are live all the time. So if you want to look at something mid-month before the financials are complete, or you want to pull up a particular invoice that you have a question on, or see if you paid a vendor for something, you can run those as board members live at any time. It's going to print with a watermark and say it's not, if you choose to print it. It's going to say that it's not part of the financial package, it's not the final statement, but you guys can see them at any time. So that's helpful if you had a vendor do something and you're trying to remember what they charged or what they did. You can just kind of search that kind of stuff at any time.
So let me ask, because I see the financials from a different aspect, right? Because we see them after they've already gone through their eyes and we're approving them from that standpoint. So when they have the live feeds come in for those transactions, does the financial portal, does it try to match those up to the correct expense accounts and things like that to give them a live look, or does that have to get done afterwards?
No, you can see it live, so it'll show where we're supposed to initially.
Okay.
And then as we make adjustments to the financials, as we finalize them for the month,
Okay.
it'll move, but you'll see it live.
So there's rules in there for specific transactions and vendors, okay?
Yeah, so it automatically just kind of like a little back end of our system. So it looks at whatever vendor you use on a routine basis. So I'll like pick a lawn contractor. And it automatically knows what we coded it to the last month. So it automatically codes to that if it sees that vendor. And then if it's maybe not your lawn contractor, but maybe they came out and trimmed a tree and we want that 2 different GL, then we manually change that to where we want it to go. So let's dive into some of these screens here a little bit. So this is what it looks like when you log into your portal. So this is where I was talking first about the document section. So you can see on here the bank statements, and they are separated in there by year and month. So you can drill into them and see copies of them. Same with financials, budgets, any of those financial documents are loaded in there. And then these are the co-owner version of the financials, which, like I said, it's just like the cover page, balance sheet, the basics. And then invoice images is a giant batch file every month that goes in there of every invoice your association paid for that month. So if you're looking for something in particular, but you don't know what month or don't know a specific dollar amount, sometimes people sift through that and find it that way if they're looking for something, but they couldn't remember maybe the name or the date it happened. You can look at them that way. Any questions on the document section, anything that's in there? There's obviously a bunch of other items in there too, but I'm just focusing on financials with the seminar.
If they have CDs or other investment accounts, those also appear in the bank statements, or do you guys make a separate folder?
No, they're all grouped together, all sorted by year and by month.
Okay.
So then diving into the next section here at the bottom, which is board actions. So on the left, this section is unique to board members. And again, I'm just going to focus on the financial items there. There's a bunch of other tools that you can use, but we're going to focus solely on the financials right now. So some of these things at the top are on every page within the portal. So if you don't know when you log in, you can always look at items that are assigned specifically to you. So maybe you're a board treasurer and you have to approve an invoice. If you click my items, it'll come up. Anything that's assigned specifically to you, we're waiting for an action from you on. Open is going to show anything that's open for the community, and then closed is obviously closed. So you can toggle between those. And then anything in the entire system that has these 3 little dots next to it, you can go through and filter items. So you can filter a particular date range you're looking for, a particular vendor, whatever that may be. And in the top right, you can actually save that. If it's a layout that you like and that you use all the time, you can save that layout so it looks the same every time you're in there. So diving into board invoices in particular. So there's going to be a few highlights on this page, which is the default page for it. This first column is going to show you where the invoice is at, if it's at a approval stage, if it's in a pending completion stage, if it's been paid, whatever stage it may be in. And then it's going to list whoever the service provider or vendor is, the invoice number, date, dollar amount. And then Nick, to your question there, the GL description is going to show where it's coded to. So if you're a treasurer and you're paying particular attention to that, you can see that right from there. And you can actually click it and message on there. So if there's something you want to see coded to something different, you can actually just shoot a message on there and say, hey, change it to this. And then it goes to our accounting team and they can change it.
So that's my next question. So the treasurers have to ask for your permission to code something separately. They cannot go in and change coding, correct? Okay, got it. Okay, good.
And this is going updated daily?
Yes. Yeah, this is a live feed from our system, so anything we're doing, you can see live. And then the little attachment paperclip icon, again, that's on everything within the system, work orders, ARC requests, invoices, whatever that may be. You can view any attachments that are on there. And keep in mind, if there's multiple attachments at the top, it lets you scroll through those items. So it's going to show you whatever the most recent one is when you click that attachment. So if you know there's more than one and you just can't see it, it's because it's embedded within that same one. So you can just scroll through at the top. Any questions on the invoices? These are super easy.
Well, yeah, I got questions, but I'm not. I think they're very good right now. I'm ready to put the cameras off.
You want to focus it on you. So again, I'm just going to dive into some of those other pages that we talked about. So this is when you click bank accounts. So again, this is what you can see. Every bank account that the association has open, the account name, what bank it's with, if you have multiple banks, if it's a savings or checking, if it's a CD, you can view a snapshot of the balance there. And again, if you view the little eye on the right, you can actually open and see every transaction on that bank account.
And that's up to date.
Yes, yeah, that's a live
Live
feed directly from the bank too.
So Joe can't lie to me anymore.
So you can see with all of the CDs that are there too, we always put the date of maturity after it, if you ever wonder what that date is. So you can see that on the balance sheet, on the GL account, and any pages that you're in here on, so you know when it's coming.
What's the advantage of a CD?
I mean, it's really more of a protected, I mean, it's a well-protected investment that basically has a stated interest rate that's higher than most savings accounts. I mean, right now, with some credit unions, like I think I would guess 6-month CD at almost 6%.
I got a 14 month, that's 5.18.
Yeah, so,
But the thing is, there's things that need to be done over there that are very, very expensive. We got $30,000 in CDs and.
right, because there are penalties for pulling that stuff out early, right? If you don't let it go until maturity, so.
Well, they've been in there for like 3 years, so they're certainly matured. Well, you gotta wait till the end of that year.
Right, and a lot of them have auto renewals on them, which is already with the dates too. So if you don't touch it, it auto renews. You have like a 10-day grace period to close it. But a lot of associations, which you can see here, is they have them all laddered. So they have them all tiered, where there's 2 that come due this year, 1 next year, 1 the following year. So you have that if you have expenses that you know are coming, tier it and say, okay, we're gonna need $20,000 in 2024. So let's make sure that one expires in that year.
And these things, this will show the interest rate that it's on too.
It's on the bank statement. If you look in there, it doesn't show it on this particular page, but each bank statement shows the interest rate.
6%.
Yeah.
I have to call you.
I just raised it again like 2 weeks ago, right? Another 0.25%.
Oh, really?
Yeah, well, yeah, the Fed rates,
So then the next item on there is the report. So this is at the very bottom of your page, and this is where I said you can access and run live reports. So this is a view that all board members have. So if you're on a board, you can see all of these reports. Treasurers have a little more, which I'll show you those in a second, but these are all the reports they can run. So just as a board member, again, I'll just focus on the financial section here, but you can run basically the items that are in the financial report. So you can look at the check register, income statement, any prepaid owners, balance sheets, those type of things. And again, like I said, it's all live. So you can view it if you click view, and it'll just automatically default to whatever the last fiscal period was, which is usually the prior month. But again, you can change it. It's interactive. So if you want to look for June of 2020 for some reason, you can put that in.
What was that called?
Reports. And then you can also, again, with this one, download a PDF. But like I said, it is going to have a watermark across it. saying this isn't a final report, refer to the financial packet. And again, there's a lot of other reports on there that are super useful. I don't want to dive too much into it. I could talk about data all day and you guys would boo me anyway. So, and then this is the next page. So treasurers on a board have a little more access to financial reports because typically they're reviewing the financial statements a little more detailed. They're looking at invoices a little more, or any of you treasurers. Congratulations. So yeah, you have this access level where you can actually dig into like trial balances and look at bank reconciliations. You can get into the nitty gritty details of stuff that most board members don't even want to look at. You probably don't want to look at. But you do have that access level in there. So this is a snapshot of everything you can see as a treasurer.
Some of these reports can even be duplicated just in like a different aspect, right? So like sometimes like your bank register, your trial balance, if you really look at it, they have all the same transactions. It's just what are you looking for and which of these reports is going to best fit, a specific transaction or account that you're trying to drill down on. So, but all the information is basically going to be the same, just in a different format.
Well, and that's a good point, because if you look at like balance sheet, there are 1, 2, 3, 4, 5, 6, 7, 8, 9 different versions of the balance sheet. So it depends what you're looking for. Are you looking for something that is grouped by the funds, the reserve versus the operating fund? Are you looking for something that's consolidated that just shows you the total? So all of these reports have different variations. The income statement has 132 different versions. But that's why the treasurer has access to more of that, because they're typically like researching stuff or trying to dig into stuff a little more. So reading the reports. So let's dive into some examples here. So as you run live reports in the system, you can also click on GL accounts or dollar amounts. So if you run a report, say you run your income statement, this report, and there is $51 here for the gate telephone line, and you want to see more details on that, you can click directly on that and it'll show you the transaction. So it'll show you a copy of the invoice. It'll show you the date it occurred, if there was any other details on it. It's gonna itemize that. It'll itemize that out for you. So a couple just basics on this report. At the top, it's going to show you whatever date range you're looking at. And then those top fields are static fields. They're always there. So no matter what page of the report you're on, you can see that. So the left-hand side is always going to be your current period. So it's going to show you in this first column whatever your actual is, whatever you spent in that current period, which in this case is the month of June. So this is the amount that you spent for each category in the month of June. The next column is the budget. So that is your budget for that particular month. And then the next column is the variance. So this is going to show you where your variance, where your difference is. So let's look at association fees here real quick. So this particular association collected $44,000 in association fees during the month of June. They only budgeted to collect $21,000 during that month. So they have a variance of $23,000, showing they collected $23,000 more than what they expected or what they budgeted to collect. And then you're going to see the same thing year to date. It's obviously just year to date. So it's going to show you what your actual expense is, what your budget is, and what your variance is.
And let me just, we'll probably get to it in a little bit because I know we're going to talk about budgets, but those budgeted amounts, are those static for every single month in that year? Like, can you have a specific budgeted amount for a set month compared to a different month? You can.
Yes.
Okay.
Yeah, so we break out when we build your budget for the year, when we send you your budget draft for the year, we break out things like your lawn contract, your snow. Those are easy examples. So we know you don't pay for a lawn contract in December. So we budget it only in those months that you pay it. So you will see different amounts for different months based on what the service is. that answer your?
And that's what I thought, so, yeah.
That, I was taught that if you had more things for the things, if you didn't spend, the money left over would be in parentheses. I don't see that there.
Yeah, so it depends what it is. I'm gonna jump into that here in a second. So good question. So your variances, so if you have an expense and you have spent more than you intended. Yes, it's gonna show you parentheses because it's gonna show you're over budget. But if it's an income, it's not gonna show a negative because you're not negative. You have more than you
Yeah,
anticipated.
it just shows, yeah.
So I kind of have a little snapshot of that, and I'll send this presentation back out to everyone after we do this as well. So yeah, positive variances on expenses mean you underspent, negative means that you overspent, and then the converse for income, if it's a positive variance, it means that you have more income than budgeted, and negative means that you have less income than budgeted. And then on the far right, you always have that static field again on the annual budget show. It just kind of gives you a snapshot of where you're at compared to what you anticipated for the year. Any questions on this page?
So I just want to know, how much did we miss?
Like 15 minutes.
Right? If it just going over the individual statements?
We just kind of went over at the beginning,
More than 4 yeah. and just add some more
it's reports.
Now we're getting the actual financial statements themselves and understanding them.
So this is an example of where, so on your income and expense statement, it always has a net total at the bottom. Depending on your association, most of them are gonna have a net total for operating and for reserves. Again, depending on how your association is set up, I just want to kind of speak general here. But you'll always have an operating net total. So this is kind of a quick thing that you should be looking at when you're looking at the financial statements, just to see if you're on track. So looking at the last page, you should be looking at the variance column for year to date, to see if you have any large variances. So if you see huge numbers in that column, negative numbers in that column, I know Nick loves negative numbers.
Yeah, we always try to find the negative numbers in the actual current period, but now we're to the point where they all make sense.
But those should be red flags for you. Those should be things that you're looking at to say, hey, why is there a huge variance there? Did we either collect way too much? Did we not collect enough? Did we spend too much? Those are the things.
Yeah, and if you notice the variance in the current period, look at that year-to-date number because you may have under-collected in a prior month and now you're catching up, right? So checking that year-to-date variance is always very important, especially as you move towards that next month to know what your goals need to be.
Exactly. So
Did you say the negative are the parentheses?
Yes.
yes,
Okay. So in that column, you're looking for parentheses, so you said large amounts?
yeah, large amounts too.
Yeah, or really just any, I mean, especially if it's a negative large amount, right? So,
Oh, yeah.
Yeah, so if we vastly overspend on an expense that we weren't anticipating or budgeting for, we want to know why.
So then the next thing you want to look at on that income and expense statement is your net total. So again, you can look, these static fields are there all the time where it shows you your actual versus your budget, excuse me, and then your variance. So you want to look at those net totals and kind of see where you're falling. So again, a positive net total means you're in the green. If it's negative, that means you're spending more than you're collecting, which is.
Yeah, I think you said that backwards a minute ago. This is what this is showing. This is showing me a positive 11 grand. And that's what's in parentheses.
It depends if it's an expense or income.
I'm just looking at top line numbers.
Yeah, so that's because your income, your association fees collected were $11,000 less than what you had budgeted for. Right? So we see less in an income side as like cash that we're not
Oh.
getting. So it's a reduction of cash, therefore a net.
So that is, that
Yeah.
is a negative.
Yeah, so if that was an expense, if you spent $11,000 and you were budgeting to spend 23, then you'd have a positive $11,000.
I'd be happier than dog. I'd have the money I need.
But that's where we were mentioning too with the other reports there. So if you see let's go back to this other page here. So this association in that current month has collected 23,000 more in association fees than what they anticipated. So if you want to dive into that and see, then you look at the prepaid report and see maybe homeowners prepaid, or maybe there's an added assessment that was invited.
Yeah, because in this case, we have an added assessment account when those additional assessments come. And, sometimes maybe those added assessments were put into association fees and not into the added assessment account, and then we can make those adjustments from that standpoint.
Is that atypical to be that far off? I mean, collecting 20 and
Not
only
if you
getting
get
10 of it?
Well, in this particular case, in this example, like Nick mentioned, they have an added assessment. So a lot of people will just pay their dues, maybe ACH or online, and they just pay a giant lump sum. And then when we prepare the financials, then Tara splits it out and says, okay, this much is added assessment, this is normal dues. So that just hasn't been done yet for this example. What I'm showing you. So any other questions on the variances or the net totals? Anything else?
Does this one have reserves in and outs? Okay, so the other thing that I'll note on the operating side, does it have reserve outflows or inflows, Steve?
Yeah, I have that part up.
Okay, well, so in the case here, so the one thing I'll mention to you is that operating total, okay, that includes money that you are sending to your reserve account or that you are pulling out of your reserve account, which took me as an accountant a long time to figure out how you had a transaction on the profit and loss statement. That's what I look at it as from a business standpoint. And it affects, because simply you're not spending that money, right? You're moving it from this pocket to this pocket into a savings account or a reserve account essentially. So just understand that too. And if you're looking at your whole month, we're going to get to this in a minute, you're trying to look at your entire month of cash inflow, cash outflow, you really need to look at it after this reserve net total is also accounted for too, right? Because if I send $100,000 out of my reserve account into my operating to pay for whatever it may be, I don't really have $100,000 of income, right? I just moved that money over to my operating account. So basically what we do is we show the transfers from operating to reserve on your income statement here to give you and homeowners and everyone a better idea of what's the cash flow, right? So like we always use statement of cash flows in accounting that, look at those things and transfers, but in this case, it's all here for you on the statement of revenues and expenses.
And the flip side of that, so at the bottom of your revenue and expense statement or your income statement is the reserve side. So if you contribute money to your reserve account, it's going to show here on reserve income, whatever you contributed for the month. So this association put just over $8,000 in reserves. So you'll see an expense. Let me see if I got that off on the prior page. Yeah. So you'll see an expense on operating of $8,000, but then you show an income of $8,000 on a reserve.
Yeah, so that's how it washes out, which is why we recommend that if you're looking at, you go back to the operating one real quick. So if you were looking to say one more, we had the operating at the bottom. One more forward. So if you're looking to say, holy, did I really have $24,000 more cash now than I did at the beginning of the month? We would say, no, you actually have, and you go forward one more time, you actually have 32,000 because 8,000 of that went into your reserve account. You still have that money, right? You didn't pay it to a vendor or to a lawn care service. You simply put it away into your reserve account for a later time for a planned project that you have inside your community.
And with reserves, we also build budgets out for your reserves. So if you anticipate replacing roofs, paving a road, something, a large capital project like that, we budget for it. So this association, you can see you budgeted around $150,000 in expenses. So they put in $105,000 into their reserves for the year, and they anticipated spending $123,000 out of reserves. So they're anticipating spending more than they put in because it's money that they already had in their reserve account.
You can also take those large capital expenses like paving the roads or doing roof. You can also have them recognized on this reserve income statement as well. If the money's not transferred over to the operating and then spent, on the roof. So, yes.
I'm gonna ask a very remedial question. I'm not trying to hold class up, just if I
That's
can
okay.
get this straight up in my
Yeah,
head.
all day.
Our reserve situation is kind of wonky right now because we just took it back to like 3 basic accounts.
Okay.
Trying to understand, we've got the operating, then we have the reserve, and then we have, the capital account, I guess,
Okay.
for eventual expenditures.
Yeah.
I'm still having a little trouble understanding from an accounting perspective. I know 10% of the association dues goes right off the top into the reserve.
Okay.
Okay. And then my understanding is the rest of it is supposed to go into operating. Nothing is supposed to be going into that capital.
Okay.
And I could be wrong. I'm just trying to, this is my understanding. The capital comes into play if and when there is,
Too much in the reserves?
I don't know if it's too much in the reserve, but if we have to do, say, a project.
Yeah. That's the one too. Yeah.
Project, when you have those assessments.
Oh, okay.
I don't quite know how it works, but I thought that account was set up to monitor the money that's being collected from special assessments.
Okay.
So there's no money supposed to be going into it. Basically, the only 2 active accounts are the operating and the reserve.
Okay.
And then that other one just sits there until it's needed. But
Okay.
right now, it seems that we've got money going into both of them, and I can't seem to understand or get a clear explanation as to why we're putting money in the capital or how that money is getting in there.
So it may be, I don't know your statements in particular, which we can dive into it after we're done recording. All your guys' associations.
Yeah, I'm just trying to
Yeah, no, I get it. So typically you'll see that if there's multiple reserve accounts. So if you're planning for, say, roofs, roads, and painting buildings, those 3 things. A lot of associations will set up 3 separate bank accounts then, so that they know, okay, we're saving this amount each month towards the roofing project, this amount towards paving. So then they contribute to those reserve accounts a set dollar amount each month, based on how much they think they're gonna need. for
I
that
think that's how
project.
it started, because we
Yeah,
did have a
so
roof
that's what it
reserve.
sounds like.
Right,
Yeah.
but I think
If
the
that,
money that was coming in was almost level with the money that had to go out for operating, and then
Yeah.
all the expense accounts were getting a little confusing, so we had new people, and so let's just take it back to basics
yeah,
before we get complicated.
Yeah.
So we're back to basics, and I'm still a little not clear.
which we'll dive into that a little later in the stuff building budget and how you should itemize those things out. So we'll dive into that a little more. Any other questions on the reserve income? Anyone on, virtually, have any questions? Okay. Guys are making it easy on me. So next page is the balance sheet. So again, I want to dive into the income and expense statement and then the balance sheet. There's a ton of reports in your financials, but these are the 2 primary ones that you should be really taking a look at on a monthly basis to see where your association stands.
What was the name of the other one?
Income or statement of,
Revenues and expenses.
Statement of revenue.
Yeah, you'll have an operating portion and a reserve portion. They're all the same.
so on the balance sheet, again, like I mentioned earlier, you have, so again, this example has CDs. So the dates next to it, are the dates that the CDs mature. And then again, you have your operating and your reserve funds on this report. And a total under each one. So this association has just over $33,000 in operating and just over 36,000 in reserves. And then your totals on the far right there. Any questions on this one? This one's
Where do the CDs fall into? Where they are going into just the operating account? Where are they being counted?
They're considered a reserve because you don't have,
Reserve?
because you don't have immediate access to them
Right,
without taking
okay,
a
that
penalty,
makes sense.
so,
That makes sense.
so.
Yeah, that's to me how it's supposed to look. You're operating. I can see where the reserve would gradually start maybe getting up because maybe you're putting more money in there than you're having to take out. But yeah, it seems like they should be kind of close to numbers.
So next I want to dive into budgeting a little more. So this is again a sample of the income and expense statement. And down here at the bottom is where Nick was talking earlier about an expense on the operating budget to contribute to your reserves. So all of these you can see are reserve contributions, and they show as an expense on operating, but then they show as income on the reserves.
There's also one in there for the roof as well. You have a separate roof or capital improvement and reserve account.
Yeah, so that was the example that I was talking about there. They have a separate account for roads, they have a separate account for roofs, and then they just have their normal reserves. So again, looking at this report, you always want to look at first, why are there variances? What are the variances? Is it something that was a one-time expense? You had some kind of emergency situation where you had to drop a large sum of money on something and it's not going to happen again? Then you don't necessarily want to budget that for the next year. So what were those one-time expenses? Is it something that you should be prepared for in the future? Or was it truly a car crashed through a building and you had to replace something? And then look at, on this report, what wasn't budgeted for the year. So if you want to look at the far right side, look for anything that doesn't have a number there. So in this particular case, they didn't budget anything for tree removal, but they've spent $695 on tree removal. So again, you want to look at it as a board member. Do you plan on doing more tree removal next year? Was it maybe from a storm and it wasn't something that was expected that you had to cut up a tree? But those are the things you kind of want to ask yourself as you're building a budget. And looking at what projects are happening next year. Do you have any large projects planned? Is there something on your reserve study that you should be doing in the next year? Are you budgeting for that appropriately? What contracts are expiring? So you typically are in multi-year contracts for your snow and lawn contract, maybe some other services if you have a set schedule for maybe painting buildings or doing roof replacement, maybe you're in a multi-year contract. But you want to look at what ones are expiring and account for what those contracts may go up the next year. You know, inflation is a killer right now. So you want to try and project that if you can't get a bid when you're working on the budget to know what it's going to cost the next year. Just try and project a little higher for inflation.
And not even just your contracts, it can be with all your expenses.
Yeah.
Right? So.
Yeah, you want to, oh, that was my next point. So did you account for inflation? So all the way across the board here, we're seeing BTE bills go up, water bills go up, just everyday costs. You know, when you go to the grocery store, we have to think that same way for the association. You have to budget a little more for insurance, a little more for gas or water, or those type of expenses. We're seeing a lot of insurance increases, just due to mainly the cost of goods in general. So your insurance policy is built on how much it would cost if, say, a building burns down, how much it would cost to replace that building. Your insurance company assesses a value and says it'll cost X amount to replace it, so your premium is going to be this. Well, that cost has now gone up because wood costs more, materials cost more, so they're increasing insurance premiums a ton to offset that. So if you haven't seen a big increase in your insurance, you should be thinking about that and planning for that because it is coming.
And so when you do that, you account for inflation, it can help you get into what you're trying to get into next, or just planning for, do you have to increase your dues? Right?
Realistically, it seems like you have to increase your dues every year, no matter what.
Oh, yeah. And, yeah, because you want to make things better and better for the community. And the way that happens is that you guys as board members and treasurers and presidents have more capital to do so, right? Things aren't getting cheaper, and I don't like doing manual labor, and so don't call me to do it for free. And I don't know if any of your people in your communities want to do the manual labor for free. So it costs money, and with everything going up, you're going to have to raise your dues in order to keep up with that.
Well, and it's something that you should do, just a planned increase. If it's the ultimate key is the reserve study, which I'll dive into that here in a little bit. But if you don't have a reserve study, just planning and doing a small increase each year. So it's not, your association doesn't go 10 years with no increases, and then you have to double your association dues because you don't have enough in reserve. So you always want to kind of be ahead of that, slowly increase over the years and build up that reserve account.
Can always go with a special assessment, which is temporary.
You can too, and there's which I'll dive into that again in a second, but there's many different options to get income. And you guys as board members know your community the best. You know, the demographic is it. An elderly community that's on a fixed income is it. A younger group that can afford a large assessment. So you really have to look at that and see what works best for your community.
Can I ask a question?
Sure.
Why would you do that? What,
Why do you do it?
why would you look at who you have in your building? I mean, I guess my thing is, you know, if you can afford to live in the building, you can afford to live in the building. If you can't afford to live in the building, then you need to move. I mean, because you need to look at what's best for the building.
Definitely.
You know, if you keep it back in the old times and you never move forward, then at the end, you have a big mess on your hands. And so, yeah, I hear you, and I know in my building, that's what happened.
Yeah.
And as a result of that, the people that live there now are paying big bucks.
Yeah.
I know that. And so my thing is, you know, I feel sorry for that person that can't stay, but you know what? I don't know what to tell you.
Right.
So, you know, it's what is, you know, what is best for the building. It's not what is best for the tenants.
Yeah.
I mean, I think you have to have some compassion, but I think you really need to look at the bigger picture.
Well, at the end of the day, like you're put in the position as a treasurer, like you have compassion, you're a human being, you have a job to do.
Right, exactly.
So, and if the money's gone because you didn't collect enough, that same person is gonna look at you and say, why don't we have any money?
Exactly.
So, I mean, they have compassion too as human beings, but they think you have a job to do, right? So it goes back the same way.
It does.
And then to go to your point of the added assessment, it's always it can always be a safe haven, right? Like a savings net, right? Of like, we need to get through the next 6 months. We need to do an added assessment. But this is just me personally. If I was a homeowner, I would say, okay, great, you're assessing me this. Because I used to work at a country club, so I used to hear all the members complain about added assessments. What am I getting? And if all I'm getting is just a continued of what I'm already paying for it, you feel a little bit cheap, right? So that's why those minor increases in fees to go with inflation, to go with the improvements in your community, I think is the best bet. But you're right, you do always have that opportunity to do an assessment if you get in the pinch.
And to your point, you all have to remember as board members, yes, you live in the community, yes, they're your neighbors, but you're officers of a corporation, you're running a business. So it's always important to remember that if someone leads a case about why their violation isn't a violation.
If an individual runs across our tanks, do we have the power to make an exception for that individual, approve an our time?
Yeah, you as board members you have the authority to make almost any exception that's outlined in your governing documents. But again, I caution you on that what precedent do you set? What do you set up for the future by causing or by allowing that exception? So here's an example here real quick of some of the things that we just talked about on the last page, looking at variances, what were one-time expenses, what is over or under budgeted. So look at this sample, this income and expense statement, and what should they do differently for the next year? Anything jump out at you?
Can't see. Damn old.
Now you were second here, you had a chance to pick your seat right here.
Right in the front of the class. Anyone on Zoom that can see it better? Or Google Meet? I gotta stop saying Zoom.
That's all you said.
Right. So looking at these, looking at the top expenses there, they have huge variances on a lot of expenses. Can you go back to the other one? Maybe there. So looking at their variances on year to date, they have some huge variances where they have overspent. They went over on elevator repairs. So this is a high-rise community. They went over on elevator repairs, 30,000 for the year. They went over on plumbing, 9,000. They went over on electrical, 1,000. And this is only halfway through the year. So to me, that's indicative to say, hey, you way under budgeted and you need to reevaluate your budget next year.
Are you looking at that 30,000 down there? Why isn't it in front? Oh. Okay.
Yeah, all at the top.
I'm looking at everything you just read off, which is over there, and I'm like, those are positive
yeah.
numbers.
You're right, because all those things are necessary, obviously.
Right, you need elevators, you need
Yeah.
electricity, but again, it's going back to what I was saying earlier, is it one-time expenses? Is it something, maybe the elevator had some large issue that you had to pay a big chunk of money for a repair? Is it something that's gonna be ongoing? Or is it something that you just truly under budgeted for and need to budget higher? So again, here another example. So this is looking at the income at the top and the expenses at the bottom. So looking at this, they are, so far in the year, they brought in 15,000 in income and they've spent 16,000 halfway through the year. That's a problem. So do they need to increase income or do they need to decrease spending? But again, that should be a red flag that you should be saying, hey, what's wrong here? What should we do?
And they're over budget for their income too. So they've actually brought in more than they were anticipating. They still managed to spend more.
It's still overspent.
Right. But again, one-time expenses, maybe there's a certain budgeted number that hasn't been updated in a couple of years. Those things can slip past, that can happen. So, but they can always be adjusted.
You are looking at the top report when you're talking about where they over and under and.
Yes.
So they spent, or they brought in 15,000 in income, which is their total year. So operating income, that's their total that they brought in for the year. And the expenses, the total expenses. Yes. So directly below it, if I lined it up properly. So they spent 15,800 for their over budget by 800-ish for the year so far. And again, this is only halfway through the year. So you want to look at, maybe there's months you're trending higher for certain things. Maybe there's like water bill, your irrigation cost is higher in the summer than it is in the winter.
Can we see the previous statements for previous months? Are they
Yes.
historically out there?
Yep, so you can look in the documents section where we started at the beginning. You can go through and see each one at a time, or you can go to the report section and just run the report for whatever specific one you're looking for.
The other thing I'll point out too is that in this situation, you can see it up here, it's kind of cut off. They've also put almost $3,500 into their reserve account. So again, we look at, if you look at it as a whole, between their operating and their reserve, they do still have cash in their pocket compared to the beginning of the year. However, you're just simply looking at from the operating side, maybe they over budgeted the amount to put into the reserve on a monthly basis.
Okay, can I ask you this?
You can.
Okay, the reserve, that's 10% of what you bring in, right?
Yeah, so the state statute right now is that you have to maintain 10% of whatever your annual income is. So it's your total of all your income. So in this case, 15,000. So this particular association would have to maintain 1,500 in reserves at all times.
Okay.
So a lot of times people confuse that you have to contribute 10% all the time, which yes, that's great. You should be contributing more because honestly, 10% is way too low if you get to large projects. But technically the state statute is that you just have to maintain 10% of whatever your income is. So that's something that is, I'll get to it here in a second, that's changing here within the next coming years. There's legislation that's going into place that's not quite finalized yet, but it's going to be more rigid and more structured on what you have to have in reserves. Because the 10% honestly is just an arbitrary number someone made up in 1832. I don't know when it was made up, but it doesn't, if you think about, like Joe, I'll hit on you. If you put 10% of your annual income for your association in reserves, would you ever be able to afford to repave your roads?
No.
So that's
Not
where,
at all.
that's where it's just an arbitrary number that someone came up with at some time. But that's where it's key to look at doing reserve studies, having accurate bids on large projects that you know are coming up, and really looking at those numbers to make sure you're funding appropriately. Because 10% is just not gonna cut it.
And mortgage companies don't, they want 10% each month going in.
Yeah.
Okay,
Or
what about,
they want 10% minimum going in.
okay, what
If
about
that's
taking it out?
sales. They just care about, mortgage companies only care about what's going in.
What's going on?
That makes
Does it
zero,
say?
that makes 0 sense. So mortgage companies typically, like Tara said, they just want to see on the budget that you're contributing 10%. They don't care what happens after that, which makes no sense, because you could put it in, pull it right back out. But that satisfies the mortgage company's requirements. Go figure.
Well, you're talking about the mortgage company, but here you said it was a state requirement.
Yeah.
That we put 10% in.
Correct.
So what does that balance have to always look like? There always has to be something in there
Yes.
for the state
Correct.
requirement.
Based on how the statute is written right now, there always has to be 10% in there.
Just 10%.
Of your income.
Of your income during that month, or is there a look back period?
No, it's for the year. Okay, so whatever you budget, whatever your annual income is budgeted for the year, you have to have 10% of that in your reserves at all times. But again, we as a management company, we always recommend way more than that based on what the needs of your community are, because 10%, like Joe said, it's not gonna come right.
Are there actual penalties for violating that?
So I don't, so let me make this disclaimer real quick. I'm an attorney, not giving legal advice. So no, there's not the condo police that are gonna come and say, hey, you don't have 10% in your, but what can happen is if there is a co-owner or homeowner in the community that has an axe to grind for something and they say, hey, you have 9.9% in your reserves, they could file a lawsuit against the association and say, you don't have what you're supposed to, you're breaking the law. And then it goes into a whole rabbit hole of whether the board members do that or if they have D&O insurance, it just goes down a hole. So you don't even want to broach that subject, you just always want to have it at least 10%.
So that's 10% of the revenue, the annual revenue.
Correct.
So if you have $100,000, 10% of that is what, I don't know, 10,000.
Mhm.
And then, so you get 10,000.
Mhm.
So now you go into the next year, you've got 10,000 in there from the year before. Do you have to put any more in?
Technically, no, you just have to maintain 10%.
So 10,000 has to be in starting January.
Correct.
So, and every month it should be growing technically, but at least all those months have to be at least 10,000.
But you're right, that would be foolish, because one project I was talking about
Right.
is
Yeah.
a surprise to
Right.
us all,
Yeah.
and it's 9,000.
Yeah.
Exactly.
Yeah.
And then you dip into that reserves, you have 1,000 left, and then how long is it gonna take you to build that back?
Is there a grace period?
You
There's no grace period for the no penalty.
gotta
Rely on
budget
somebody on the property that's got a $20,000 credit card to loan you the money to get that.
Exactly.
You got a budget for those that don't pay their association fees too.
Unfortunately.
We have thousands and thousands of dollars people haven't paid, unfortunately.
Wow.
And that's, to your point, hopefully those people eventually identify that that's not the place for them to live after.
Yeah, don't
the
you
board-
record that to legal and move forward with that?
Yeah, there's a lot of,
There is, but that costs money too.
Well,
continue to.
it depends on when you want to take the loss,
Yeah.
right? I mean, when you want to take the hit.
Well, that's where it's I go back to the same thing that you're running a business. Yeah, you want to have compassion, maybe that someone can't pay. You don't want to foreclose on someone because they haven't paid, but you're just kicking that can down the road and eventually it's going to be in the same boat. So you need to just think of it as you're running a business. You have to do what's best for everyone in the community, not necessarily what's best for the one individual.
Well, that may be true, but if I can afford it, I'm not gonna kick somebody out for a reason that's beyond their control. They didn't, when they moved in there, they could afford it. I'm thinking of one person in particular, been there a long time.
There's always that one, always.
They've been there a long, long time. They've afforded it all these years. Now all of a sudden inflation goes through the roof, you know, and they're struggling a little bit. And if they ask, I will grant them that.
So you're not running a business, you're running a shelter.
Right. Exactly right.
Thanks a lot.
I think
I'm
you're
sorry.
outvoted.
I'm going through my own landlord tenant thing, my personal landlord tenant thing, and that's kind of my argument with her. I'm not running a shelter.
That may be, but living in the houses, there's a problem. All of us are friends. Yeah, I know everybody in there.
Yeah, if if you've got a community where you can show that kind of compassion and it's not gonna hurt you from the business process, then.
You're absolutely right. If it means that we're not, that it's gonna hurt our budget, then no. But right now, $250 every 3 months, I think we could afford that.
Where do you live? I'm gonna move.
Well, we're in the home, so that's a little different. We don't have.
I'm close.
We pay for our own roofs and bushes and grass and all that.
So let's look to diving in here.
You thought we were making it easy on you, there's some of your time,
It's good. I love questions. I want it to be interactive. I don't want to stand up here and lecture you guys. It's boring. So looking at funding your association. So we talked about budgeting, looking at your reports to say, hey, where are you over or under budgeting? So now let's talk more holistically about funding your community, doing increases on a routine basis. So are you seeing continual increases in expenses?
Mhm.
Generally? Everything? Is there anything that's not going up? Are you budgeting for it? So
We just did, and I'm just waiting to hear about it. September 1st, I'm gonna move.
We're fine, we're good.
So right now we're leading into, as we call it here in our office, budget season. It's the fun time of year where we're trying to get lawn contracts, snow contracts, looking at roof bids for the next year, looking at if you're gonna do paving projects, trying to get estimates on that. And we're building preliminary budgets for you all as board members, and then we send it to you, get your input and so on. So we're looking at those things and saying, okay, where are we seeing huge increases? We're looking at the same things that I just showed you guys. Are there large variances? Are there big projects coming up? Are we under budgeting for things? Are we not collecting from one particular homeowner each year? And we should account for that.
Well, I'm here to say your property looks mighty good, so you're kicking in the right saw with your collections. Are we part of that?
Next thing is your reserve study up to date? So do you have a reserve study? Does everyone in here know what a reserve study is? Don't be shy.
Never heard of that. I know what a reserve is. I never heard of a reserve study.
Didn't have one for my time.
So in your association's particular case,
we did.
it wasn't something that was done super often for homeowners associations. You live in a homeowners association, so they're basically single family homes. Each individual person pays for their own roof, their own landscaping, their own structure. So there's not a lot of shared expenses in the community, maybe some ponds, maybe some common areas that they mow, but there's not a ton of expenses that are shared amongst everyone.
Right.
So for condos, the flip side, you pay for everything. You pay for roofs, brick, irrigation, you name it, you pay for it. So a reserve study is where a set of engineers will come out to your property, evaluate everything that the association is responsible for, looking at tuck pointing, bricks, roofing, whatever the case may be. They'll look at your governing documents and see what you're responsible for. And they're going to look at all of those items, evaluate where they're at in their useful life. Do they have 10 years left before you have to replace them? Are they in good shape? Are they in poor shape? And they're going to put this whole comprehensive report together, looking at all of those things and tell you as a board, are you planning enough for it? Are you going to have enough money when it's time? They say your roof has 10 years left. They're going to estimate what the roof is gonna cost in 10 years to replace. And they're gonna look at what you're bringing in income, what you have in expenses, what you have in reserves, and they're gonna tell you, you either are gonna have enough or you're not. We rarely see, I don't wanna say never, but we rarely see anyone say, yeah, you're funded perfect. You need to decrease your dues. You're never gonna hear that. But it's something that the board can use as kind of a guideline because they map it out for generally 15 to 20 years. And they say, here's what your dues should be in 2023, what they should be in 2024, to make sure you have enough money so you don't have to do a special assessment. You don't have to do the loan. You don't have to come up with alternative funding methods that way. So it's something that you guys can use as board members to kind of lean on and say, especially if you have to do an increase in dues, and then all the homeowners and co-owners come for you with pitchforks at the annual meeting, you can say, hey, we had a professional study done by engineers. They said we need $20,000 next year and we have nothing. You have that as backup and to support why you increase dues. And that helps you guys look at more long-term funding and where you should be. So
What does that study cost?
it depends on the association. So
We had it done in 2019, it's $3,100.
That's not,
No,
that's for home.
and like you said, it lists everything.
So it's usually a like 80, 90 page report with a ton of pictures, ton of graphs showing you how you're funding everything. And it's something that, so I'm on the legislative action committee for the state of Michigan too. So we work on amending the laws that pertain to condo associations and homeowners associations. So something we've been working on here recently is a reserve study funding bill. So it is to replace that 10%. And it's looking at, okay, rather than just arbitrarily picking 10% that you should have, it's going to require that the association has whatever the reserve study says they're going to need.
So that point, does it mandate a reserve
So-
study?
Yeah, so then at that point, then it means you have to have a reserve study. There's a certain timeline. It has to be updated every certain number of years. Again, this is all just kind of in the works right now. It's not definitive, but it's coming within the next year or so. So you should be prepared and start thinking about that now. Like high rises, I know you guys have one, you update it all the time because there's so many moving parts, quite literally, that you have to look at it, you have to know, but maybe homeowners associations didn't have that. But you still need to look at things like your stormwater system that drains into your retention ponds, look at things like that that could impact the whole community. So that's something.
You said it's coming in a year. You just had one done in 2019. Is this gonna wash that out?
So there's gonna be you're gonna be grandfathered in with this legislation. So you'll have like a look back period, and if you had it within the prior, right now it's looking like 3 to 4 years, you'll be fine. But it's going to be going forward, then you have to have it updated depending on your association, every either 3 or 5 years. To make sure you don't have one done at one point and then stuff deteriorates quickly or faster than anticipated, or the cost goes up more than they anticipated. So it's important to just have it continually redone. To
Well,
make
it
sure
sounds like 2019 is already out of the box. It's coming.
Yeah, if you had it done at 19, you should be updating it for sure. So again, that looks at like what projects do you have coming up? So your reserve study looks at large scale things, roofing, paving, elevators, large ticket items like that, but it doesn't look at necessarily things like painting buildings, replacing maybe some rotted wood under fascia boards, looking at, I'm trying to think of examples here, just some minor type things, replacing maybe some landscaping, some dying shrubs. It doesn't look at that kind of stuff because it's just your normal everyday expenses. But you guys, when looking at your budget, need to be thinking of that too. Do you want to go through your property and rip out a bunch of dead shrubs the next year? Are you planning for that? Is it coming from reserves? Is it coming from your operating? How do you plan on paying for that? How are your reserves funded currently? Where do they stand? Everyone's gonna be at the 10% threshold that is required by the state, we make sure you guys do. If not, we'll be knocking on your door saying, hey, you need to increase dues. But again, that's not enough. You need to be funding more than that 10%. You need to be planning ahead for large expenses.
And two, figuring out, are they funded through additional assessments or are they already baked inside their association fees themselves? Right. So manner in which they're done.
What improvements does your community need to make? So are you continually looking at saying like things I just mentioned, like painting wood? Maybe you want to add a new park bench in a common area. Maybe you want to add some new playground equipment. Is there improvements that you want to do that your homeowners want to see or that you want to see as board members? And are you budgeting for that? Because again, like Nick mentioned, you do a large assessment and people don't see any physical action from that. It's just to cover your normal expenses. They get hot and bothered by that. So are you planning to do something that is aesthetically improving the community that they can see? Work being done, roofs being replaced, stuff being painted. Do you have that kind of plan going into it? I'm gonna keep harping on reserve study. Do you use that reserve study as a tool? Are you looking at it when you make your budget each year? Are you making decisions on what to spend money on based on your reserve study?
So I believe we had a reserve study. I'm new to the board. Where would I get a copy of the reserve study?
So your reserve study is on your portal.
Oh, it is. Okay.
Yep. There's a separate folder in there that's just titled reserve study.
Okay.
But all the different years are loaded within there. So if you had like your 2019 one would be there. If you had them in different years, they'll all be separated on there. This is a big question that we can help you with sometimes too, is how do your assessments compare to similar communities in your area? So a lot of times boards or homeowners will say, oh, I think our dues are too high. But maybe 2 miles down the road, there's an HOA that has the same kind of amenities that you have, and their dues are double yours. Ask us that. We can pull data from around other associations from around you and say, hey, here's kind of the average. They have similar amenities, similar number of units. So it's good to compare that as well.
I have a question. I don't know if this is an appropriate time or not to ask it. We live in an area where it seems that one end of the complex seems to have more need for attention because it was formerly swampland or something. So there's a lot of problems. And then the other properties, maybe not so much. So it appears that there's always a lot of attention that has to be given to these other properties. So I'm not sure how you balance that out because it's getting to the point now where we're getting a lot of grumbling. Well, when are we going to get some paint at least or something? Everything's always here, always here, always here. I don't know how you get that merry-go-round to turn.
Right.
So that there's some, even if it's just an aesthetic, how do you justify? I mean, of course you justify it by saying, look, they were ready to fall into a sinkhole.
Right.
You weren't, but it does seem to not be a level playing field.
Yeah. Well, and I have an answer that you're not gonna like, so sorry. That's part of living in a condo association. To your point earlier, when they move into this association knowing they're contributing to everything. I'll pick on homeowners associations because it's easy. A lot of times there's a pond. So the homeowners that live on the pond get a nice view of the pond, they have a fountain, but the neighbor 3 streets over that can't even see the pond is paying for that fountain. So it's the fact of life and living in a condo association that you have to pay for everyone's amenities and what they get, whether it impacts you directly or not, you have to pay for
I happen to live on a pond.
it. See?
A big one, but the initial cost was $25,000 more than anybody else in there, so.
I don't get
We-
my whole feelings on that.
Yeah. So we do pay for it, just in a different direction.
Yeah.
But you didn't pay to the condo, did you?
It's a home. It's a home, and yeah, it costs a lot of waterfront property.
So again, diving back into
Waterfront property.
how often are these increased? That's something that you're budgeting on a yearly basis, even a small, I was gonna say, we used to say 2 to 3% each year, but inflation's triple that. But are you budgeting a certain percentage each year that you're increasing? Are you looking at your expenses and saying, hey, we're short X amount each year, let's increase our income by that amount? Again, what's the financial makeup of your community? There's options to bring in income, there's assessments, there's loans, there's increases in dues, and there's different situations for each community on what works best for them. I can come up with one example of a property that is a small 8-unit property. Their dues are $400 to $500, their percentage value, but they're $400 to $500 a month. So the board doesn't want to increase their dues because they're already super high. So instead, they just have a recurring added assessment that they do each year. So when someone's trying to sell a unit, if they say, hey, the dues are only $400, but there's an added assessment. So there's always that small glimmer of hope the added assessment may go away, which we don't never will. But it's again about the makeup of the community. If they want to make it appear that it's better for resale and that the dues are a lower amount consistent with communities around them, then that's up to the board's discretion.
There's a question.
Could you explain some of the pros and cons of the association taking out loans? And are there legal ramifications?
Yeah, so the first, I'll make my same disclosure, not an attorney, don't play one on TV. So the first thing that the association needs to look at is the governing documents. Most governing documents say the board can take out a loan. Some do not, so you want to be cautious of that. And then typically a loan for a community requires a 66 2/3 vote of the co-owners to approve that loan. So you have to outline why it benefits them, why they should do a loan. And a lot of times it's even going door to door as board members and getting them to turn in a ballot to vote for the loan. So you want to look at all that stuff first to make sure that you can do it, that you would gain community approval for it before you go through the process of actually doing the loan, because it is a cumbersome process.
How does it impact the individual property?
It doesn't. So that's the good part about loans for condo associations is it's not like getting a loan on your home. They don't place a lien on your home. There's nothing against your title, nothing against the homeowner personally. Because with condo associations, membership is mandatory. So there's always income. It can't just go away. Someone doesn't pay, then the association can take them to court and get the money that way. So there's always a guarantee of money. So banks look at it in a way that it's not risky to them. So they don't place liens, they don't do things that you typically would see with a loan.
So the debt actually belongs to the association.
Correct. So that each month the association's just paying whatever it costs to service that loan. You build it into your operating budget. Sometimes it's a small increase in dues just to pay whatever that debt servicing cost is each month. And it's cheaper than doing an added assessment of $5,000 ever.
So is it a smart thing to do or a necessary thing to do if you are thinking about a loan to have, do you need an attorney's input on that, or do you rely on the bank's explanation or the smartness of the board that you have in place?
All of the above.
All of the above.
So I would say, I'm not gonna pick on you, but based on your governing documents, I know they're ancient. So yes, I would have an attorney look at it because they are probably written in a way that's not clear, would be my guess. But yes, you should always, if there's ever any question, I mean, you guys are just volunteer members that live in the community. You're not attorneys, you're not insurance agents, you're not engineers. Rely on those experts. That's what we're here to help you with, is to get you in connection with attorneys, with insurance agents, use our expertise, use what we know. So you guys can make educated decisions. That's part of why we do these seminars, this expo that's coming up. We do these on a quarterly basis. We do the magazines on a semi-annually basis. We have a ton of stuff on our website if you haven't seen it. There's a ton of articles, videos, different things about running an association and resources for you. So always use that stuff. We're here to help you guys with it. Did I answer your question on loans? Sort of, kind of?
Yes.
I don't, do you have a
and-
particular, like,
Okay, so what would be the cons of the loan?
I would say there's no cons in particular. The only thing with a loan is that sometimes it's hard to get approval from the owners. So I would say that's the con per se. But that's the same with anything. If you go and try and do like a bylaw amendment or you're trying to pass some kind of vote for something, there's always people to get people to respond. That would be the only real con I would say of doing that.
Okay.
Interest.
Well, interest is so minimal right now. I think the last loan I saw close was like 3.5 or 4% interest.
Still depends on the amount of the
Well,
loan.
yes, it depends on the amount, but again, if you look at I'm just gonna pull numbers out of my head here, but if you're doing a loan for 100,000 and your association has to pay to service that loan, maybe 2,000 a month. That means an increase in everyone's dues, maybe $2-3. Well, if you don't do a loan and you have to assess $100,000, then you're assessing everyone $5,000 each. So would they rather pay $2 or $3 a month to help service that loan and pay interest? Or would they rather cough up $5,000? Any questions?
I have a question.
Yeah.
In doing the budget, we refer to our reserve study and we go back maybe 1 year, 2 years to see, our income versus expenses.
Yeah.
How far should we go out if we're doing 24 budget? How far do we look out in the future to say, hey, we need money for this, this, and this? I mean, I thought it was like a 5-year window, look out 5 years and try to, compensate and have enough money in there for the 5 years. And not going out 10 years or 20 years or 30 years as the reserve study suggests.
Yes. Yeah, so my general rule of thumb is 5 years. So yes, your reserve study is gonna project 20 years out typically. And you should always be conscious of that and cognizant of that and thinking about that. But 20 years from now, prices are gonna be so different than what they are now.
But prices right now are so different from what they were 5 years ago, 3 years ago.
But it's gonna be much closer if you're looking at a 5-year period and say, okay, let's really look at what's coming up here in the next 5 years. We know we're gonna need a big chunk in 7 years, but let's focus directly on that 5 years is kind of where I look at it.
Because I know about 5 years ago, we had, the reserve study says we're gonna need new roofs in 2028, 29, which is gonna be total, like $1 million, back then.
Right.
So about 5 years ago, we start putting money away in our reserve to pay for this. When it comes to 2028, we'll have at least $1 million in our reserve study to pay for that part of it. And again, prices will increase, so.
Right.
So I guess my question to you is, a 20-year reserve study is gonna be like a moot point if the state is gonna say you have to have a reserve study every 5 years.
Yeah, the only benefit of looking out the 20 years is to see the more long-term stuff. So if I'll pick on you again, an elevator, they're typically, when you modernize an elevator, they're good for 20, 25 to 30 years. So that's not going to be an expense that you're necessarily going to see within that period, but you should still be conscious of it, that it's going to come up in 20 years.
To your point, even on that 5-year or 30-year, projection, if you have a bad year of inflation, it's like, listen, this isn't slowing down. You can always continue to adjust that moving forward, right? So like 30 years ago, my windows that I'm getting measured tomorrow did not cost what they cost 30 years ago. So you adjust to those things as you keep going, right? So.
Does anyone on Google Meet have any questions? You guys have been super quiet.
They've been smiling the whole time. It's so impressive.
There's only a handful left. There was 20 something. Now there's only, was that 6? 5, 6? It must be boring. Any other questions on anything?
I think it'd be more interesting if they were here.
Right.
Sorry.
Just wait to the expo.
Okay.
Then we'll have all.
Everybody comes to that.
Concluding the presentation?
Yeah, we'll wrap it up here in a second.
Although not.
Yeah, we're still recording.
So which we sent out for any of you that are on virtually. We sent this out in email. We're gonna be sending it out a bunch more, but our expo's coming up. Those of you that have been to it in the past, you kind of test that it's amazing, and this year it's gonna be even better. But we have speakers that are coming, one that is gonna be talking specifically about reserve studies. We're gonna have an attorney there talking. I'm building a board member panel that's gonna be talking about different issues that they face in their situations. There's food, there's good sand. It's gonna be a good time. So register if you haven't already. You can just scan that QR code and like you registered for this.
Okay.
Right here.
Yeah.
What band? Next year,
It
I was
was, it's a local one. I can't think of their name off the top of my head. It's one out of Wyandotte. So yeah, sugar something.
Yes, that's what sugar something.
Yes.
That's
sugar.
next
If you look at
year,
our website, it's on the website.
next year it's us.
Okay. Yeah, we have this year
We're good.
it just kind of worked however it fell, but everything's Wyandotte Central. So the venue's in Wyandotte, the band's from Wyandotte, some of the vendors are gonna be from Wyandotte, the food's coming from a place in Wyandotte, so it's all Wyandotte Central, which is where our company came from as well, so.
I remember,
Get back to our roots.
I remember the old building.
Remember our building?
So
Well,
you
the
guys-
band's out of New Boston. I mean, that's.
So if no one online has any questions, I'll go ahead and wrap this up and close out that, and then I can stick around for any questions that you guys have as well. Anything else you want to fire at me? Any input for any other seminars you want to see?
No, I just thought this was wonderful. This is my first one and it was very informative. I enjoyed all the questions that everybody had. I love the idea of different boards sharing. I think that's wonderful.
Yeah,
So, yeah.
I love seeing, like I said earlier, the interaction, but you guys talking to each other.
Yeah.
You're in so different communities. So
I've got
different-
to ask her, what did you do for a living?
I was a banker.
Yeah.
I'm retired. I've been retired.
Boy, that's great. I got a banker and a CPA. over here.
Well, and we have so many different backgrounds here, and I mean, you guys are 140 or 104 units, condos with different styles of condos. You're in an HOA, you're in a condo association, but they're all similar. You're in a high rise. I don't know where you're from, sorry. So we have such a mix and just interacting with each other and knowing, that's what we're here for. We do these seminars every quarter. The last one, we had a few attorneys here. This time we had Nick from a CPA firm. So we always want to bring resources to you and help you with anything. That's what we're here for.
And you know, Nick, I was at your seminar and last year, right? Yeah. And my tax lady had passed away, you know, and I talked to him, Gwen, and I talked to him and I said, you know, I'm just at loose ends. My tax lady passed away and I just feel bad. He said to me, her name wasn't Gwen, was it? And I said, yes.
Yeah.
And I said, oh my gosh, so he had.
She actually been to our office.
I had
Because
been
Glenn
to
had worked in our office.
Exactly, which I didn't know him.
Yeah.
So now he's my tax guy.
So, but it's actually,
It was supposed to meet or something, I mean, it was supposed to happen.
yeah, and just a little bit about us for the people that joined here late. So we're the CPA firm out of Allen Park that we consult with KS every month and on an annual basis to prepare the tax returns for all the association, answer any questions that you guys as board members or Tara and Lee may have regarding any of the financials. If you guys have any questions, I got business cards up here. or refer to me, or they can contact with me. Other than that, we'll see you guys at the expo. We'll be there. So,
I can, hey, yeah, Sharon, I'll answer your question real quick. So we get someone on here that asked a question.
She got all excited.
So Sharon's question is, can you speak briefly about how the prepaid HOA fees are accounted for? So within your financial statement, you'll see a report that's called prepaid homeowners. So that report is going to show you anyone that is prepaid, anyone that paid their association dues in advance is going to be listed on that report with the amount that they paid. So on your income statement, you're going to see that as like this example we had way back in the beginning. Let me go back to that real quick.
Yeah.
Okay, so this is an example. So this is where you would see someone, they collected $23,000 more in association fees than they anticipated. So if you look at your prepaid report for that particular month, that prepaid report is gonna show $23,000. And it's gonna show you who precisely is overpaid and by what amount. So those will always match each other.
And they pay in December. I
Yes.
think that,
Yes, so all of your accounting is done on a cash basis. So anytime the cash comes in, it hits your statement. When it goes out, it shows on your statement. So if someone pays a big chunk in November, December for the following year, you're gonna show that income in, I'll use this year as an example. You'll see that income this year in 2023, but they're technically paying 2024's dues. So next year, you're gonna show that you didn't collect enough, but it's because you were over this year.
which isn't a concern for the homeowners associations, because you guys are not taxable entities.
Does that answer your question, Sharon?
Well, real estate tax.
We got so much we could bite off.
Okay, are all these prepaid what they owe us, or we owe them
That's what they paid in advance.
in advance?
Yeah, correct.
Yeah, if it's the prepaid report, it's what they have paid in advance to the
Yeah.
association. So technically, it's on the prepaid report because in some instances with some associations, if someone moves out and has prepaid, the association may have to pay them that back. So if they've paid a large chunk and it's for dues 6 months from now, and they sell right now, the association may have to pay that back, depending on your governing documents.
But if they're prepaid, it only shows up in the months that is being reported on.
The month that they pay it, yes.
Right, but I'm saying if they pay July, but they pay for the rest of the year.
Mhm.
When you're doing the July report, you're only putting the July dues, you're not putting the whole, everything they paid.
On your income statement?
yes,
Yeah,
No, you're putting everything because you're cash based, so you receive the cash in July. So you're putting everything down in July. So that's why you may see a variance like this where they're overpaid.
But that report that she's got there, you'll see each month then whatever their prepaid is gonna decrease as dues are billed each month, whatever their prepaid amount is just gonna decrease. each month.
So what would be interesting is that if you looked at how your prepaids change from one month to another and compare that to your variance there, you would think that, okay, if I'm over $20,000 here on my variance for my budgeted income, I may have an extra $20,000 in prepaids that I have now that I didn't have the prior month, right? So,
okay, what happens when you have a little star, a little asterisk?
that is somebody who sold a unit and we're trying to usually get the address, where they moved to the address. So they can pay them back money. They're prepaid, but they don't own the unit no more.
So that's the case where I said that the association has to pay them back then, whatever they